Good morning, good evening, or good afternoon, wherever you are in the world. The topic on the table today is breaking down the true reason behind Proterra's over 15% plummet on July the 12th.
Today's video will be broken down into 4 parts, breaking down Seeking Alpha's latest article about Proterra, Proterra's latest filings, who's selling, and the long-term effects of Proterra's recent filing. To say the least, Proterra had a sharp decline on July 12th. Many investors and traders have speculated on the true reason behind Proterra's 15% dip, and many have been pointing to the Seeking Alpha article highlighting Proterra, titled "Proterra is promising, but a little too expensive." The article goes over Proterra's fundamentals, stating it as a fast-growing EV bus business that has seen revenue increase over time. They also mention the fact that Proterra has already been delivering EV buses to customers, comparing it to Proterra's competitors who are all still pre-revenue. Much of this article is breaking down Proterra's S1 filing, but providing their own take on Proterra's financials and outlook. Near the end of the article, they called Proterra overvalued and gave Proterra a price target of $8. The reasoning states that Proterra would need to exceed its current and future projections to match its 9 times multiple to 2025's estimated free cash flow. This was most likely the reason why many speculated this article for being the reason why the stock dropped in price. If you want to see a video of us refuting the argument from the article, leave a comment down below. But today, we are not here to break down why we disagree with this article, but rather to show you the real reason behind Proterra's crash. To give you a heads up, in the next 2 sections, we will share why there is more to the story, and why the dip was actually caused by a recent filing to the SEC. In addition, we will tell you whether or not to be concerned in the long term. On June 29th, Proterra filed their updated S1 filing. An S1 filing is an SEC registration required for US companies that want to be listed on the national exchange. It's basically a registration statement for a company that filed for an initial public offering, also known as an IPO. On July 9th, the SEC responded to Proterra with a letter of effectiveness. The letter of effectiveness essentially means the SEC has looked and approved their filing. The S1 filing, also known as a prospectus, discloses everything regarding Proterra's financials, fundamentals, and even shareholder breakdown. Much of the report entails all the potential risk and even disclosures to prevent any potential lawsuits in the future. Although this filing is over 300 pages long, we've uncovered some important information that helps us reach to our conclusion. Who's actually selling?
So who's selling? To find out who's selling, it's important to look at the shares that could be sold. To see this, we can look at page 177 of the S1 filing, which states that PIPE investors have 41.5 million shares to sell, founders have around 6.8 million shares free to sell, and large institutions labeled as Proterra holders have around 59.9 million shares to sell. The first group we'll take a look at are the founder shares. Founder and employee shares would make sense to be sold, as if you worked at the company for many years, you're more willing to take profits after some large gains. However, this is most likely unable to happen due to Proterra's employees being in a quiet period. A quiet period is a set amount of time in which a company's management and marketing teams cannot share company information and opinions as well as sell stock. This is to ensure that insider information is not released and select investors won't gain an unfair advantage. The quiet period stretches from the time a company files registration paperwork and through 40 days of stock trading. Since Proterra didn't officially start trading under the ticker symbol PTRA until June 16th, it has not yet been 40 days, and therefore founder and employee shares are still in a quiet period. A lot of rumors have also been going around that the selling has been from PIPE investors. To preface this, I just want to remind everyone, just because shares are now able to be sold, doesn't mean they will be sold. Therefore, we must look at who is in the PIPE for PTRA before making this conclusion. In Proterra's first press release announcing they went public, they said their PIPE included Daimler Trucks as well as Franklin Templeton, Chamath Palihapitiya, Fidelity Investment and Research Company LLC, and accounts managed by BlackRock. Each of these companies or funds have reputations of going long-term, except for Chamath maybe. Proterra attempted to target PIPE investors that had a long-term mentality and understand the potential value of the company over the next years, not months. So it would be a surprise to me if most of the PIPE investors already sold, as it would be against their past actions. So this all begs the question, if PIPE investors are long-term holders and the insiders cannot sell, who could it be? Let's go back to those 60 million shares. These 60 million shares are owned by various institutions and large holders of Proterra. Many of these institutions were early, Series 1, 2, 3, 4, etc. And also many of their goals were to profit off the company if they went public. Most of them have pocketed 100+% returns. So without a doubt, they will begin to take their money off the table. This selling and possibly a little selling in the pipe is where we believe millions of shares are being sold from. But don't let this number worry you, as most of the institutions associated in this 60 million share group are not looking to get out anytime soon. Millions of shares are held by Generation IM Climate Solutions, over 6 million, Tech Opportunities LLC, over 1 million, and Cohen Sustainable Advisors, over 30 million, as well as many other institutions. All these entities are long-term companies focused on clean energy investments that I suspect will not pull out anytime soon. Overall, we think the selling is likely a mix of PIPE investors and Proterra holders, but it would make sense if the selling is dominated by the original institutional investors in Proterra beginning to take some profits. So now, what is the long-term effect of Proterra's most recent filing? While this selling may occur over the next days and weeks, we don't see a significant effect in the long term. A lockup is simply a natural part of any SPAC or IPO and doesn't affect companies in the long term, as it is part of being a public company. It is also important to note that Proterra fundamentally has not changed. Therefore, if you're an investor, then this price action leads to a good point to scale in a position or lower your cost average. We can also look at a similar de-SPAC name, ticker symbol STEM, STEM. STEM faced a similar decline, which was then followed by a 100% climb. So while it may be impossible to predict the future for PTRA, Proterra, we will definitely be along for the ride.
Make sure to go check out our Instagram page right over here where we post daily stock market picks and updates.
Make sure to check out our stocks, Twitter, and Discord, all linked in the description below, as well as hit that like button if you enjoyed the video, and hit those juicy red tomato subscribe button and those post notifications to keep up with our next videos. Thank you to AsimBoy563 for recommending this video. You could do the same by leaving a comment down below. Other than that, thank you for watching and good luck on your investment journey. Bye!